Nifty and the Sensex have ended a volatile week absolutely flat, though Friday was a lot better. Midcaps are down about 1%. IT has been the top gaining sector this week. Over the next 30 minutes, we will decode the week gone by on Dalal Street and, of course, put the spotlight on RBI's monetary policy decision, its impact on the market, and whether these newfound rate cut hopes for February, whether they're well placed or not. And of course, we'll also decode what top brokerages are expecting from the market in 2026. Hello and welcome to this edition of Editors Roundtable. I'm Rupee, and as always, with me, Nimesh, Prashant, Nigel. And joining us in the newsrooms today is Sanjay Parak of Soham Asset Managers. Thank you, Sanjay, so much for joining in. We're hoping now you're the good luck charm. Because, see, you decided to come to the office today and the Bulls managed to take things above 26,100 once again.
Right.
So, ab aage kya?
So, RBI has done the heavy lifting and government also has done their bit. But I think still, state government is still not spending as much and it's all gone towards the populist schemes. And still the economy, and I mean, we have to read also that RBI has cut because the growth is still missing, and despite the rupee pressure. So I think, you know, when you see steel, you see power, you see cement, the growth is still missing. So I think they need to stimulate the economy further, and that's what they're doing.
That state government point is an important one, right? It doesn't get talked about because we look at the central. Yeah. But I was looking at the numbers. The central collection of GST is up only 1%.
Yes.
1%.
Right.
Whereas the total GST number is up 12%. This is year to date. Where is that money gone? It has gone devolution to states, refunds, etc. So money is going to the states.
Yeah.
But it's going, I guess, into
But unfortunately, the
various
states are not
things.
spending on capex. No, that's
They're spending on
Ladki Bahan and everything else. So I think that's been a bit of a mismatch, right? And that's showing up in the mid-cap underperformance as well. A lot of the stocks, especially in infra names, they all are worried about, you know, receivables which are coming from the state government. So I think that's a valid point that, you know.
The other point, guys, is the RBI, right? I mean, you got to think about it. Rupee at 90 and you get a cut.
Yeah, you got a cut.
Right? I mean,
with dovish language.
With dovish language.
With dovish tones.
So it's quite, I mean, not the usual. And I think that's the right thing to do, as many have pointed out. Sajid Chunai was with us and he was saying, well, they should look at the Forex and the rate thing separately. Yeah. And I think that's what they've done. But still, 90 and a 25 basis point cut. Yes. Sanjay, you think this is the one? This is done now, or you think
I think
this is more?
See, the governor is very, very progressive and it's pro-growth. And I mean, he's aware that we need to stimulate growth. So I'll not be surprised that there could be one more at 25 bips in the next 3 months. You know, if growth doesn't revive, then, and inflation is on his side, you know, and we are in a broadly a Goldilocks scenario. Now we are seeing pressure on balance of payment and fisc, because second half we will not have room to spend big way. So that's the one more ammunition he has of one more rate cut if needed.
On the rupee, Sanjay, you think it is done? Books closed for 2025 with what is done? I mean, it's logical also because a lot of foreign banks, etc., will close books, go away for the last 15 days,
yes.
right? So that perhaps that pressure also will be not there. So
it's a tough one, but you know, see the pressure on balance of payment is there. If you see the first half, it's $16 billion negative, which is on the reserves. So it's not that we are out of control, and I think RBI has more ammunition. Today you saw a swap line being opened. So if required, they may, you know, still do few more things to stabilize rupee. And I think we are in control that way, but largely I think we are done. It's tough to call on Forex.
well, yeah.
Sanjay, but, you know, how would you position yourself then? You know, as you're saying that, you know, Prashant just made the point that collections haven't been as much. Capex spend has been beautiful in the first half of the year. Now, in all probability, that slows down in the second half of the year as well. How do you position yourself? Consumption could get a bit of a boost. Discretionary consumption is something that people have been like. While Capex slows down, I think a couple of those names you're liked as well from the intra space.
Yes.
So incremental money, how will you allocate?
So we position with domestic discretionary financials because they're reasonable on valuation, logistics, telecom, capital goods. So all the domestic plays we are positive and it's broadly working for us.
So telecom, what do you like?
So telecom, we are big overweight on Bharti and we have Indus Tower both.
Okay.
Which we like because we believe there will be a solution to Vodafone. It will be a slow process, but ultimately there will be a solution.
And on financials, what are you all playing? Are you all playing the NBFCs? Are you all playing the larger private sector banks, PSUs, or the smaller banks? There's suddenly, a lot of interest, a lot of money as well as coming their way.
Right, so we have all larger banks, SBI, ICICI, Axis, and SBI, and HDFC Bank, and then we recently increased Canara Bank. So we have all larger banks, and in NBFCs we have Bajaj Finance, India Shelter, which is a housing finance play, and then broking entity Angel. That's the way.
But Sanjay, if you're expecting another 25 basis point rate cut, that would mean that there'll be further pressure on NIM, right? Especially for private banks.
Yes.
How do you navigate in that?
So this year, most of the street is not expecting anything major in terms of NI and NMs. And surprising, the second quarter there was a pressure, and yet the stocks actually went up.
Yeah.
So I think it's all taken in the stride that whatever damage has to happen on NI and NIMs will happen this year, but that will be a base for next year.
Sure.
So when you see next year, they look quite better.
In that financial space, the fact that we've seen so much of FDI coming in, RBL Bank, Samman Capital, anything that strikes you in that space, the mid-sized banks which potentially may see more FDI investments?
Right. So, see, it's certainly, if you see the RBL Bank or Yes Bank, or even recently what happened to JSW Steel, I'm digressing, but it's big.
Yeah.
It says about a person cutting a check on EV of 53,000 crores for 4.5 million ton.
Right.
So it is really positive from FDI or from that perspective. But, all these where they've invested, the ROEs are going to be back-ended. So we would rather want to be at a place where now, and the divergence in return is not large. That's the point. So we are in the larger cap space.
Since you digressed a little bit, let me take you a little bit further, right? Since you spoke about ferrous.
Yeah.
Let's talk about non-ferrous. Aluminium, I put out a piece actually. I'm not sure whether you had a look on that. Global aluminium demand could go up by around 3 to 4%. Supply will not go up by more than 1%, because China is already at 97% ballpark. And, whether you talk about EV, you talk about data center, you talk about the grid, everywhere you require aluminium consumption. Now, after a while, we could have 2 to 3 years of deficit of aluminium. What is your call on that? I recall that, Vedanta is something that you have liked, I think, from 400 rupees, or maybe even lower than that. And then it went through a painful period, but now things are showing up. So are you all positive on aluminium?
You're totally bang on. See, ferrous, at least you have a worry on China. But in non-ferrous, you're not going to see China dumping aluminum. And you're absolutely right, the capacity creation is going to be less. The new applications are coming in, lightweight vehicles. Solar. Battery storage. Even in battery storage, you need aluminum. So there is going to be need, and then supply is not coming in. So both Vedanta and Hindalco will do well. It's just that, we are positioned with Vedanta, and Hindalco also at a price would look well because we are very positive on the aluminum cycle.
Okay, all right. Just one fear I have is, when aluminum prices move up to a particular extent, some of those smelters that were shut will say, okay, now the dynamics are working in our favor with the cost of production at $2,400. And if LME moves to, say, $3,000 odd, that could be one risk. But that supply risk of China, at least, that is out of the way because they're at 44 million tons out of the 45 million tons of capacity that they have.
Absolutely.
Sanjay, we can talk about the other big story, right? Kaynes.
I was just going to get
Massive. The big correction, Sanjay. What did you make of that situation? And then all the others also sold off today. All the other EMS players, PGEL, Amber, Sirma. So what's happening there?
Yeah, I think, one is the character of the business. Getting first on Kaynes, we all read the report, and I'll initially tell it's aggressive accounting. Not go to the governance aspect of it. But I think the aggressive accounting is clearly visible, for sure. And then the character of business in terms of the working capital cycle, the ROCs, because of the longer working capital cycle. And that has been prevalent in this space. So the street was buying growth and not looking at balance sheet. Yeah. But now for 40-50% growth and 15-16% ROC, will consistently need capital actually. So that is a little bit of what we need to watch, the balance sheets, not just the revenue statement.
But the question is that is this an isolated event with one company, and you can argue that maybe accounting should have been more prudent, Or does it become a trigger for a bit of a derating? Because what we saw on stocks today was that. And we know the kind of valuations that they have traded at.
Right.
So then what would your advice be to people who already have investments here?
Right. So, we used to own Sirma. And we invested 1 point and said, we made our money, we sold off. Again, last year we bought in. And we said at 45 times, we're not comfortable. And we made our money, we sold off. So Kaynes was a leader at maybe 60, 70 times. And then you see growth getting derailed or the character of the business getting weaker does have an impact on valuation. And we've seen that in even Dixon. Well, there's no problem on that side, but you've seen from 18 to 13.5 because there is some growth challenge ahead. I mean, and growth will still be high, but not as expected.
It was 100% last year.
Yeah.
Now
So
it'll be
30%, 35%, and then margins are not going to look up,
Correct.
It's largely contributed by mobile. So a little bit of concern and that exuberance on pricing valuation comes down, and that's a...
Which brings me to another issue altogether of the market and what we're feeling right now. And Nimesh did a piece on this last week as well. Last week we hit the all-time high. Never before have I seen in 20 years an all-time high, which doesn't feel like an all-time high, right? Because the broader market has been really pained and stocks are very quick to sell off as well. EMS is one sector we've discussed. We can discuss so many others. When QSR, nothing is really moving. FMCG, nothing is really moving. And the broader market pain. Do you see that changing? The only missing piece of the puzzle is now this India-US trade deal. And there are indications, at least some conversations, that it may happen by the end of this year, in which case everybody come back from your leaves. But the point is, do you see the mid-cap market texture changing?
No, so, ours is large cap dominated fund, right? We have 75% average large cap. But I was telling my team that actually now in the next 3 months, we need to look at now mid and small caps.
Yeah.
Because now will be the opportunity when somebody else is selling out, there's some redemption, and you get that price value gap that you seek. And businesses, a lot of businesses are good. We met a lot of them, and all new type of businesses. Our worry was valuation. So now I believe actually one should look hard, work hard and get that price value gap that the problem in mid and small cap was valuation in a lot of cases. That is getting corrected.
Anything you've added in from that space recently?
No, not yet in the mid and small
Still
cap.
in the looking phase.
Yeah,
I remember we spoke about this. I said, what are you observing? He said, I'll tell you when I have something more concrete.
I'll tell you what, Sanjay started sounding a little bit more optimistic. I feel bad for Surbhi not feeling too good in 20 years about, the portfolios are not feeling like they're all-time.
So let's liven up.
Let's liven up the mood now. Nimesh, a lot of brokerages, they are writing that the earnings growth is going to come. 2026 is going to be beautiful. And hopefully our portfolios as well feel like rock and roll. Tell us what you put in
Well, Nigel, I'm not too sure about the portfolio, but at the index level, at least there is a hope, ray of hope is what I'm going to say. And everybody's expecting 12 to 14% kind of returns. And I think that's largely because of earnings.
You're going to start by matching his step.
Down step.
Let me go this. So here's the outlook for 2026 as to what a lot of brokerages are saying. It's basically a ray of hope. After a disappointment in 25, there is a hope that maybe 26 will be a good year in terms of return. So I've just mapped across what the targets of a lot of brokerages have written. BofA is at 29,000, JP Morgan is at 30,000, Nomura is at 29,300. This essentially means a 12 to 13% return next year as far as Nifty is concerned. So that's the Nifty target across most of the brokerages. Now, again, the whole thesis of they turning bullish is basically the revival of earnings. So what is going to drive the optimism? BofA says that the upside in the earnings is going to let the markets rally. And basically, they believe that the earnings cut, the Nifty earnings cut is largely behind and growth should accelerate from here on. In fact, while all this, they are not expecting too much of valuation expansion. So whatever rally has to come has to be backed by earnings. Now, similar is a view from JP Morgan as well. Even they're expecting the MSCI India earnings to be 13% in calendar year 26 and nearly 14% in calendar year 27. So again, the whole thesis of this rally is going to be backed by earnings. Macquarie believes that most of the market is coming out of hibernation. The outperformance is again going to be backed by earnings growth and revival in growth as well. So that's been the key trigger as to what even Macquarie believes. The recovery in consumption spends and resumption of FI flows could further add to the upside in next year. So that's the view there. Nomura also has a target of 29,300 on the Nifty for next year, and they believe that while the macros are sanguine, they remain very selective. It's a good advice from Macquarie that they are advising, suggesting investors not to get carried away and buy into richly valued narrative stocks. So that's a good advice as far as Nomura is concerned. Now, what are they betting on in terms of sector bets? BofA is basically betting on more of large caps over mid caps and small caps. And within these sectors, they are overweight on rate sensitives as well as in consumption, but they are very, very careful and underweight on capex play. So that's a contra view on capex from BofA Securities. So that's a view that. Now, JP Morgan also has a sector bet. They are overweight on materials, financials, consumer discretionary, as well as consumer staples. Hospitals also they like, and so is real estate. But they have a bit of underweight as well in some sectors, which I think includes some, again, the capex plays is what even JP Morgan seems to be not very bullish on. So, okay, they're negative on IT as well as on pharma as far as JP Morgan's underweights are concerned as sector bets for next year. Similar is a call from Macquarie as well. Okay, they've put out the big sectors or the big stocks to bet on. These are the big picks from Macquarie for 2026. They've classified into 3 buckets. The first bucket is the 6 core stars, which includes HDFC Bank, TCS, Reliance, M&M, Divi's and Jindal Stainless. They have a tactical plays, which includes Adani Port, Shriram Finance, ITC Hotels, Titan, Havells, those kind of names. And they have 5 or 6 rising stars, which includes Tata Communications, Make My Trip, Lemon Tree, Delivery, as well as AB Capital. AB Capital has done well as well. So these are the few stocks that Macquarie is betting on for 2026. So that's a call there. What is Nomura betting on? They are largely bullish on financials, pharma, IT, manufacturing, telecom, cement. These are the few sectors which Nomura is betting on. In fact, Nomura has put out the top 20 ideas for 2026, and that includes a lot of large cap names. They're neutral on, within sectors, they're neutral on auto, oil and gas, and metals. But I'll more focus on the 20 stocks that Nomura is betting on for next year. They're cautious on some sectors like infra and healthcare, which has been and capital goods as well, which has been a trend for a lot of them. Now, this is a list of 20 stocks that Nomura is betting on for 2026. All the large cap names are part of the list. ICICI Bank, Infosys, Axis Bank, CG Power, LG Electronics. Swiggy is an interesting name in this list. So is Ashok Leyland, Dixon Technologies. Aditya Birla Real Estate is one name in the real estate pack that they're bullish on. And MedPlus is a mid-cap company that they're bullish on. So this is a list of 20 stocks as far as Nomura is concerned. The bottom line is, next year, there is a ray of hope that markets can give 12 to 14% return, but that's going to be backed by earnings. So the large part of the focus seems to be on the large caps and where the earnings are going to be. Is that a view for you as well, that back on companies which are going to throw up the earnings?
Yeah. So in a quarterly, we have said that last year we did not have growth. This is 25. This year will be at 1100 rupees. Next year, broadly, it should be 1300, and then 27, 28 would be 1450. Jan, Feb, March, people look at 27, 28 as well. Yeah. And that's exactly at 20 times 29,000 is our view, which is where it would be earnings led and not, PE rating, because already rich on valuation.
Just to take that point forward about, you started looking at the broader market names, especially after the recent correction. Any sector specific or any theme that you feel have actually, there is a lot of pessimism now in the price?
Yeah, so we met, one of the recycling companies. Sure. We used to own one of them. So now one is a recycler in transformer space, where there is quality. Sure. We need to be there. There, the opportunity is pretty large. Sure. So bottom up, there are a lot of opportunities. Yeah. And as I said, now valuations are getting comfortable.
Yeah. Which recycler? The one that did very well and then came up? Gravita?
No, so Gravita is one. We met them as well. But one
even
of the
Ganesha,
GK and Electronics, it does recycling of this PCs and at scale. Okay. And the opportunities, it's a very, very unique company.
All right.
It's just that we are exploring and working on it. But there's no player in that segment. They do 6 lakh recycling. Their office is in Dubai.
The name of the company, sir, is?
It's called GK and Electronics.
GK and Electronics. All right.
So,
got it. Since you mentioned Dubai, are you taking a flight?
No.
No. Anyway. All right. Just want to ask you about what are you making of this entire, Interglobe saga that's breaking out right now. It's a company that has 65% market share. There's an unfortunate incident that's taking place for the customers, and then it's reflecting on shareholders as well. But it's a quality company. Right. Would you use this dip to get in, or would you stay away?
Yeah. So one is crude is in their favor.
Yeah.
But Rupee is not.
Yeah.
And they're very sensitive to Rupee, and volume growth is not there.
Yeah.
So it's just that we explored it well. It's a large cap company, and it's a great franchise, a clear market leader. So it's just that we need to from valuation perspective, we wanted it still lower than the current price. Okay. And at that price, there will be a price which you need to be contra and look through this near-term events and look through the big picture, and they've done a very, very good job.
So from valuation perspective, related space, travel, leisure, hospitality, what about hotels? I mean, no one's disputing the appetite, the long-term story.
Right.
But just how do you?
No, I mean, I'll be very honest, we've not done too much work around it, but there clearly can be an opportunity at a price in some of these larger names, you know.
Sanjay, any IPOs recently? Misho, for example. There's another one which is in the aerospace defense side. Again, great company. Any thoughts?
No, so Misho, we're exploring very positively, and it's really attractively valued. I mean, valuation is a debate, but the clear opportunity is there. And again, you know, at listing, at what prices list is for us is very important. But the business model is very, very good. You know, they're catering to a segment which is pretty large. 21, 22 crore is pretty large opportunity. So we are positively going to look at it at a price.
The other one, Acus, did you look at it? I mean, I don't know if you guys got a look.
No, I don't.
Okay. It's,
Yeah.
Sorry.
No, on IPOs itself, our colleague Hormaz was just telling us next week, a lot of the anchor book lock-ins open.
Yes.
And then the reality check hits.
Yeah,
right?
it does.
So on the high-profile names like Lenskart, even Pine Labs for that matter, positive, negative.
Yeah, so we just
valuation
had a
wise?
call yesterday with
Yeah.
Lenskart.
Okay.
And the model is amazing. I mean, it's absolutely, they are really ahead of times. It's difficult to even for any large player to even get in and just go to the level they have gone into. The back end, front end, everything are integrated.
Beautiful. I was at a store yesterday. It's phenomenal, the level of service.
It's just that, you know, again, when you put in your DCF, you put your growth of 20% for the next 3 years and then 18% for the next 7 years and terminal growth of 8%, yet the value is significantly lower. So that's our irony, that we want to buy at much lower price than the current price.
Any other segments come up? You know, you own a couple of construction. I think you own Dilip Bilkon in your portfolio.
Yes.
Interact Builders you own.
Yes.
L&T, of course, the big one you have in your portfolio. And, you know, right where you're sitting, we had another fund manager last week, Friday, and in your Nimesh's list of stocks which had fallen from the peak, KNR.
KNR.
If you remember. And I think, who was it last week?
Nimesh.
Chandan.
Chandan was there.
Yeah.
Sure.
And he was saying, well, I think he hinted that maybe KNR is worth looking at and doing some more work. And then we looked at basic numbers. You know, last year they did about 1,000 crores in profits.
Yeah.
4,000 crore market cap.
Yeah.
They were barred by NHA, and I think that's the issue which happened. But I think they've started working again.
Right.
And they started to get contracts again.
Yeah.
I don't know if you have any thoughts you've looked at it.
We own one of them. It's not worked for a year now. And that keeps us grounded all the time.
Yeah.
Which
here,
is
Dilip Bilkon, yeah. So there's a great asset play. And the coal MDO they'll be the largest in MDO, doing 25 million, will go to 50 million. They'll make 900 crores cash flow in 3 to 4 years. And I'm personally visited the mine. And it's amazing work they've done in the Coal India's block. The REIT is there, 3,500 crores. You give whatever you want to give a discount, you give a discount. The market cap is 7,500, 8,000 crores. The standalone business is free. The problem for them was the orders not coming in. And then profitable orders not coming in, because these guys have repaired the balance sheet. They don't want to get there again. So it's positive that they're not taking unprofitable orders. So there is deep value, but it's just that I think, again, the states also has to do the heavy lifting on spend.
We come back to where we started, right?
Yeah.
I mean, which is the problem with state spending, not on capex, but on other stuff.
But 2026? Better than 2025?
Yes, certainly. But it's just, I think the expectations have to be realistic.
Okay. I've heard, that's Nimesh, Kotak Mutual Fund. Expectations need to be realistic.
No, expectations need to be low.
Lowered, yeah. He's actually saying they need to be low.
Then it becomes a handy.
You'll hear him soon, because Pro IPO is coming next week.
Yeah, absolutely. So, no, this was Nilesh Shah, Kotak Mutual Fund. And Nimesh Shah will hear with the
Pro ICICI.
ICICI Pro IPO coming soon. Thank you so much, Sanjay. Great conversation. Thanks so much for joining in. And in case we don't meet in person again till 2026, wish you a fantastic new year.
I wish all of you, and Monday is your 26th year, so congratulations.
Thank you so much.
Thank you so much. Well, with that, we're out of time on this edition of Editors Roundtable. Many thanks for watching. News and updates continue on CNBC TV 18.